Okay, I'd like to introduce Jeffrey Hodgson, who's from the CPP Investment Board. I attended a presentation from them a few months ago. I found it very enlightening, and I think you all will too, especially with all of the stuff coming out in Alberta about the Alberta pension plan. So I will now pass it on to Jeffrey.
Doug, thank you very much. I'd like to thank our first set of speakers who were excellent. I'd like to thank you, CARP, for agreeing to host. I'd like to thank you all for coming here today to hear what we have to say. My presentation is going to be, I hope, a little bit more of a good news story. Tell you a little bit about CPP Investments, or the Canada Pension Plan Investment Board. Now, who are we? What do we do? The easiest way to sort of think of us is as the investment engine of the Canada Pension Plan. We manage the fund that underpins it, supports it, helps to keep it solvent. Now, part of the reason I would like to get out there and talk to people more is we're not terrifically well known. So I'm going to do a little show of hands, keep it interactive. How many people here know what the Canada Pension Plan is? I see everybody. Everybody. Before this presentation started, before you walked in here, someone had said to you, hey, could you tell me the name of the organization that manages the $500 billion fund that underpins the Canada Pension Plan? How many people would have been able to identify us by name unprompted?
Other than CBP, I can say CBP.
Just CBP, exactly. So, yeah, so just to, again, that's why we're reaching out and sort of want to talk to you. So, the Canada Pension Plan is the provincial federal plan that was established in the 1960s to sort of provide that workplace support with employees and employers contributing into the plan. And we're there, it's effectively administered out of Ottawa by a federal government department, but it is. Pensions in this country are actually a provincial responsibility. I'm going to talk a little bit about that. And then, so it's actually a cooperative provincial federal model. So I'll take you through some of that, but basically we are the investment engine. So I'm going to take you through, let's go to the first slide. So what's our job? What's our purpose? What do we do? Why do we exist? Simple, help provide a foundation upon 21 million Canadians build their financial security in retirement. Now what's that about? How do we do that? We'll go to the next slide. So basically, you all know Canada Pension Plan. It is a pillar of the retirement system, and it was envisioned, if you go back in time, there was a time where there was no government supports or no supports of any kind for people in retirement. Go back, say, 100 years. You had whatever private savings you managed to scrape together. Maybe you had family, and they were your social safety net. But then things began to evolve. We moved to sort of the early part of the 20th century, particularly when we first rolled out things like old age pension, which initially was a bit of a model where it was very hard to get. There was a bit of a sort of social stigma about using it, but eventually through advocacy of a number of seniors groups, it became a universal program. So that became the sort of first piece, old age pension and global guaranteed income supplement. We see that now. Later on, Canada Pension Plan was created in the 1960s when it was decided among provincial and federal governments that there was going to need something more. Old age pension is there, it's supported by taxpayer dollars. Canada Pension Plan is something different, and I'm going to talk you through that. And otherwise, the other pillars that I'm sure you know well, many people we're lucky enough to, fortunate to have workplace savings programs. That can be, if you're a teacher or a healthcare professional, a lot of defined benefit plans that are quite large and significant. Some of us are more like might have group RRSPs where your employer pays half into, you pay half, your employer pays half into a savings program. So those are the four pillars. So moving ahead. So again, the brief history of the CPP. So in the 1960s, again, this was the governments of Canada, the provinces and the federal government got together and said, okay, we have old age pension, it's taxpayer supported, but we should have something more because seniors poverty is still a big issue in this country. So what are we going to do? What kind of was the plan going to look like? They came together and created a program, and it was effectively largely PAYGO. Most of it's PAYGO. CPP is what's called a hybrid plan. PAYGO, a word I didn't know until I joined this organization about 5.5 years ago, means effectively younger workers pay, retiree takes the money, and as long as you have enough younger workers, it works. It's sustainable and absolutely fact. Right, so if you look to the left of this slide, 1965, 6.5 workers per retiree. So is it sustainable? Is it, can those 6.5 workers pay in? Yeah, it's good to go, as long as the demographics support it. And it's funny, when I joined, we had a senior executive introduced all the employees to history. 1969, we always talk about the birth control bill legalized in Canada, and basically demographics, and also people started making different choices and families got smaller, lower birth rates. That changes the demographics, and a pay-go plan depends on the demographics. Now, every 3 years to the state, in Ottawa, there's a separate entity called the Office of the Chief Actuary. Every 3 years, they check out the health of the Canada Pension Plan to see how it's doing. Now, when they did this in the 1990s, they took a look and they said, oh, there's going to be a problem here. So they came to the 9 provinces who are part of the Canada Pension Plan. Quebec in 1960s decided to set up its own plan and completely separate, but harmonize with the rest. So it went back to those 9 provinces and Quebec and the federal government and said, you've got a problem here. Basically, your system is predicated on having 6.5 workers. Okay, that number of workers is shrinking relative to the number of retirees. And we've done the math, and what we've learned is that by 2015, the CPP fund will be depleted. So there was surplus money, and what they did was they invested it in provincial government bonds. Very safe, very low yielding. Great if you need your money, very, very safe, and want to have, but are okay with that lower yield. So they said we have to do something. And interestingly, this is I used to work in journalism for many years, and when reporters come in, we talk about, when I was a young reporter, editors, we talk about stories, and they say, people don't want to hear about planes that land safely. And when I became an older editor, I'd say to the reporters, people don't want to hear planes that land safely. So people don't hear as much about what actually happened in 1995. A lot of people remember there were headlines, CPP won't be there, CPP is unsustainable. Why? Because CPP was unsustainable at the current rate. But you had 10 governments, 9 provinces, and the federal government got together, sat down, and hammered it. We got to figure out a solution here. And they made a number of changes, and one of them was to create the Canada Pension Plan Investment Board, or CPP investments as we're also known. So we were created to take the existing surplus, which had just been invested in government bonds, very safe but very low yielding, and invest it more broadly to get higher returns. And they said if we can get those higher returns along with other changes that were made to the plan will then be sustainable. And guess what? Good news. The plan became sustainable in part due to our efforts and the other changes that were made by the plans. So again, every 3 years, not us, but the Independent Office of the Chief Actuary, OSFI, the regulator in Ottawa, takes a look. They look at demographics. They look at projected economic growth. They look at inflation. They look at projected interest rates. They look at the investment returns that we think we can deliver before and after inflation. And most recently in December, the plan came out. Said good news. Canada Pension Plan is sustainable at current rates for the next 75 years. Yeah. Yes, yeah. So, and you probably didn't see any news stories saying, hey, good news, the plane landed and the CPP is sustainable for the next 75 years. And if I have one little takeaway, and I do this at family gatherings, and people are like, oh yeah, but sometimes you'll hear people say, well, I don't think the Canada Pension Plan is going to be around for when I'm there. I'm like, okay, well, there may be some reasons that you think that. Number one, in the 90s, there was a lot of headlines because it wasn't sustainable, but the changes were made. Number two, we've seen some very sad stories. Again, the planes that did not land, stories about Nortel retirees, stories about Sears Canada retirees, yeah. So those are situations. And also, if we look to our neighbor to the south, recently, and again, these are government reports that come out that say the Social Security Fund in the United States, there's a risk it'll be depleted by 2033. So you've got 10 years to fix the situation there. Anyways, so people associate that with what's the situation here, but I'm like, no, we had our moment in the 1990s, 10 different governments from different political stripes over a period of time, with them changing, came together and created the Canada Pension Plan Investment Board to help solve that solution. So move to the next slide. Yeah. All right, so if you know CPP, I'm sure you probably know CPP better than most of us. You may know that in recent years that the plan was expanded because the federal government, working 2/3 of the provinces, representing 2/3 of the population, decided to expand it. That means young workers today will pay in a higher rate than people who are now receiving the CPP. The upside is they'll get a higher benefit. So the original plan as it sort of sits, the goal was always to replace about 25% of average industrial wage. So CPP was never meant to be all of your retirement. At no point in the history of it, the policy, the idea was, no, it's going to be a pillar. It's going to represent at best, if you pay maximum over 40 years, you'll get a quarter of your earnings of the average industrial wage for life indexed to inflation. The rest of it is up to you. So, and some of that is old age security, which is taxpayer supported, and then private savings or your workplace plan. But again, it was never decided to do all of it. So we always say to people, you know, I always say to young people, and CPP is not everything. Like, you've got a foundation there, that's good, but remember the other rest of it. Now, under the expansion, eventually so today the maximum that you can get, I think, I think it's up to is 15,000, just about 15,000, close to $16,000. With the expanded CPP program, there'll come a point if you do hit the maximum amount for 40 years and pay in that amount, you'll get in today's dollars about $20,000, and again, indexed to inflation for life. Yep. So, how many Canadians are in the plan? 21 million. So we wake up every morning knowing we have 21 million customers to serve, and it's critically important. Here in Alberta, more than 2 million, 2.1 million there, and more than 600,000 beneficiaries in Alberta. So they're the people receiving the money, and absolutely critical, and we're mindful of that. So go move to the next slide. So again, what's our role? So we're a professional investment management organization. We invest the net contributions. So you have contributors and beneficiaries there. So let's start with the contributors. They pay their contributions into the plan. Now, some of that goes to existing retirees. So people working here will be paying money. Some of that will be coming to you if you're collecting CPP benefits. But the rest of it will come to us. It goes into the Canada Pension Plan Fund, and then they give it to us. And what we do is we invest it in the markets, generate those investment returns. And in recent years, part of our investment returns have started to flow back into the Canada Pension Plan Fund to actually fund benefits now. So we had a number of years where all we were doing was investing the money, building up the nest egg, now more than 500 billion. Now we're at the point where some of the returns that we generate are required and used to flow back and fund benefits, and that'll be increasing over the years. Yeah. So what's the job? What's the objective? I was reading something about management. Like I said, one of the most important things if you have somebody working for you is they have to understand what are they doing, what's their job, what exactly do they do here. Number one, assist the Canada Pension Plan meet its obligations. Number two, managing the best interests of contributors and beneficiaries. And finally, in terms of how do we invest, what's our goal? Achieve a maximum rate of return without undue risk of loss, having regard for the factors that may affect the funding of the CPP. Very simple mission. We don't have, some other pension plans, for example, have that goal, but also support the economic development of a specific region or other objectives that they might have. And every pension plans are different, but ours is very simple, clear. And this was set out when we call our stewards, which is the provincial finance ministers who oversee the plan. You can imagine this in the 90s. Get a group, do it just like today. Get 9 provincial finance ministers and the federal together into a room. You're going to have every political party, three major political parties and a full spectrum of views. And so, what could they agree on? They said, well, ultimately, let's keep it simple. Let's keep it clear. Let's just focus on maximizing, maximum rate of return without any risk of loss, taking into account the need of the plan, and let professionals do this. We'll move on to the next slide. Anyways, over the years, we'll get to our investment performance, but we've had the Canadian model, as it's been described, has been really validated, and we get a lot of external recognition. This was a organization called Global SWF. Basically looked at returns in terms of the skill and ability, and you'll see where CPP investment sits on that. At that juncture, I think our 10-year return or 5-year returns have been more than 12% in excess of all those other organizations. So now, how are we set up? How are we work? Who tells us what to do? Who oversees? Who supervises? That's governance. So again, we've been cited as externally by outside of Canada by organizations as having a gold standard for national pension plans. Now, what are the components? One is a critical one is independence. So when people talk about the government, we are set up, Canada Pension Plan Investment Board is set up as a federal crown, but we're operated at arm's length from government. And again, you can imagine, set up as a federal crown, but it's a provincial, all these 9 provinces don't want the federal government, they may have a perspective on the federal government going in. So they set it up and they said, we need an independent board of professionals to operate at arm's length. So governments know that they can't, any government could call us and say, look, who am I writing? There's this really great opportunity. Why don't you come and put some of that 500 billion there, and et cetera, et cetera. We look at all sorts of opportunities, but we, in terms of political direction, no, because we report to an independent professional board of directors, and I'll get to that in a second. And then our focus is entirely on generating those returns. So again, that's our job. We focus on that. Accountability, we have extensive disclosure. Some pension funds, most pension funds report the results every year. We report every quarter. We take, we have annual audits, triennial review by the office of the organization, and we have public meetings, which was Doug was at every 2 years in every province that is a member of the plan. So in 2024, we'll be back on the road. We'll be bugging Doug again and seeing if we can get you guys to come out to our meeting and hear more about it. And moving ahead, so who's this board of directors? Where do they come from? What's their situation? This is our board. They generally come out of, basically they're financial professionals, corporate leaders. So Judith, who just joined, second from our top row, second from the right. She is actually recently joined us. She's from Alberta. To give you a little sense of her background, she's a professional engineer. She also has her MBA. And I can't remember which tower it is, like one of the more recent ones that went out, but she was one of the project supervisors involved in overseeing that amid all of her other work. So what we want are people who are really knowledgeable, really capable of corporate strategy and major investments. And so a lot of MBAs, a lot of corporate experience on that board. Now, can our law be changed? Just, let's say, government decided, they want to change the mandate so that the money would be invested in a different way. Well, the amending formula is clear. You need if the federal government said we want to change it to do this, the provinces would say, wait a second, no. We need 2/3 of the provinces with 2/3 of the population to back any plan. So again, people are often like, I think the federal government might do this or that. I'm like, well, they can't, because it's a provincial jurisdiction with the provinces have, 2/3 of the provinces with 2/3 of the population have to support any changes to our legislation. Going to the next one, investment strategy. How do we invest what we do? So we are active managers, which was a decision that was made initially when we were set up. The decision was made, we'll just invest kind of passively in markets and this sort of thing. But as time went on, the board did some strategic review and said, could we, to fulfill our mandate, maximize returns without undue risk, if we invest passively, just buy an index fund, will we get the right returns, or should we be doing it a different way? Now, with active management, they decided in 2006, we should do this. And this is why. We have, basically, they identified 6 advantages. 3 of them are innate, it's like you go to play basketball, you're 7 feet tall, you got an advantage, right? But if you, having to practice and shoot and that sort of thing, that's acquired. So for us, our structural advantages is basically, we can take a long-term view. Some investors, like even private equity funds that invest for 7-8 years, we can hold an asset for 20, 30, 40 years if we wanted, and we thought it was a good investment. We can be really long-term patient investors and hold on when others might be compelled to sell. And we've got that certainty of CPP fund assets. We know roughly where, what cash flows are sort of look like, so we can deploy capital in that way. And we've got size and scale. So I often joke about, if you go to a store to buy a product or go to a supplier, if you're a small store, you'll get a certain price. If you're Costco or somebody, you can go in, you say, actually, no, I'd like to buy X amount, but we're not going to be paying this amount. We're going to be paying this amount. And they'd be happy to have you as a customer because you're big, you've got scale, you've got, and there's all sorts of advantages in investing, including the expertise that you can build up to do your own investing. Actually, if we jump back, just 3 other things. So our developed advantages, these are things we have to work on. One is our total portfolio approach. It's a team that we have that looks at, making sure all parts of the fund are working together. Smart partnering, that's something where we either decide that we are going to do something ourselves, or if we want to go there and we do it with a partner, we have the expertise to find the right partners. And again, when you're of a size and scale, people will take your calls and you can get the best people and you can assess who the best people are. And the final one is like internal expertise, which is a constant thing of trying to find the right talent. So now we've got a global presence. Again, more than 500 billion invested around the world. We have a number of offices. Toronto is the headquarters, but you'll see New York, San Francisco is our newest office because we've been both investing in technology more, but also having expertise on the ground that I'll just give you an example. Let's say you had a hypothetical, jump back in time. Let's say you were invested in a video store, video rental chain, but you started to hear about this other company that they're starting to do this thing called streaming video. Well, maybe you're going to invest in streaming video. Maybe you're not. You want to know what's going on because you also hold shares in this, and you want to have that full picture. So we have invested in offices in the UK, in Hong Kong, Sydney, Mumbai, and Brazil is also a market for us. So we've been in office in Sao Paulo. And again, we find that having our own people on the ground, both to look at transactions, study, be on the ground can help you see more transactions. It can help you better assess transactions. And then for the assets that we have, gives you a better line of sight into how they're doing, what the factors are affecting them. So everything we do is in the perspective of, does this help us become a better investor and deliver better risk-adjusted returns? So quite diversified by assets. And again, one of the things that we've been able to do, you see here, previously we're invested in, we had government bonds, we had public equities in the stock market, but we're now able to invest in private equities. So we can buy private companies, and that means the universe is bigger. So if you can only invest in what's in the stock market, great. But what if there's businesses right here in Calgary that are good, but they're not listed on the stock market, but they're profitable, they have great growth prospects. The average individual is probably not going to get an opportunity to invest in them. But for us, we can look at opportunities like that and go that route. Other things, we directly hold some real estate, infrastructure is a big one. You may not know this, but through your CPP fund, you are actually an owner of one of the biggest operator ports in the United States. So whenever you see all those traffic of port going through ports, you own part of that. Same with the UK. We operate one of the largest owners of ports there. So move on to the next, and we're diversified by region. The United States is our biggest market at 38%, but we're invested around the world. Canada is about 14%. So a lot of people say, oh, I would have thought invested more in Canada, Canadian fund. Well, the reason that, again, we assess this with our board strategically, what should we do? And one consideration is, part of the Canada pension plan, there's a pay-go element. Let's say you had a hypothetical made in Canada recession. The rest of the world is doing fine, but something happened in Canada that caused Canada. Well, if you had everything invested here, it's kind of like investing your retirement portfolio in your company's stock. It can be good when your company's doing well, but if it goes badly, you're not only exposed to the company because you count on them for your job, but also your savings are there. Whereas if you diversify out, you've got more protection. However, Canada is only, if you look at it globally, we're actually quite overweight, and we're happy about that. Because Canada is something like various studies, 1 to 3% of global financial assets. So in theory, if we're investing just globally, we don't have 1 to 3% in Canada. But we know Canada, it's our home market. We see the opportunities here, and we know so we're at 14%, and we're very comfortable with having that overweight position to Canada. Go to the next. So again, a variety of the 25 investment groups across 6 departments, but again, real assets is where we have infrastructure, real estate, we have credit, we have public markets, so quite a range of opportunities in public and private companies. And then next slide. So the performance. So this is what really counts. How did you guys do? Okay, great, Jeff. But let's see the numbers we deliver. In the last 10 years, we have delivered growing funds 529. Our annualized return, net nominal return for the last 10.1%. That's after all of our expenses. So we deduct the cost of us, running fees, everything. Annualized return 10.1%. And then in terms of the other question is, well, how are you done versus markets generally? If you go back to when we became an active manager, we have something called the reference portfolio. And that's effectively the path we didn't take. And that's a portfolio of 85% on our base, what we call base CPP, 85% equities, 15% government bonds. So if we hadn't set up the plan this way, diversified it, we could have studied a much smaller plan just on this. And the fund would literally be tens of billions of dollars smaller because we were able to exceed those returns through active management. And part of that, the huge benefit that comes from the diversification of being able to go into different markets and having the bigger investable universe, be able to invest in private equities and things. So 10.1%. And our fiscal report Q1, again, we report quarterly. We encourage people to our focus 10-year returns annualized because things bounce around a lot during the quarters, as I'm sure you, in the last 3-4 years especially, would have noticed with your own portfolio. But I'll go to the next slide. Yeah, we during our last quarter, 0.2% return on base, 0.4 on our initial CPP. So some gains there, but again, we focus on those big long-term numbers because that's what underpins the plan. And last, sustainability. So again, if I have one message for you at family gatherings, when you hear your nephew, your niece, your grandkids, your kids, anybody saying just CBD, you know, it's not going to be there for us, and that's, you know, maybe great for you guys, but it won't be there. You can say, actually, based on an independent review by the Office of the Chief Actuary, they found that it's sustainable for rates for the next 75 years. So anyways, good news, spread the good word, and I think we've got a final slide. This is a 2050 projection coming out about where things are going to go. By 2050, there's talk that it's going to be looking at more than a $3 trillion fund. So again, we're still in growth mode. Also, if you have any nieces, nephews, talented, knowledgeable people in financial markets looking for opportunities, have them go to our site, look at our talent section, or because we also want to stand out as a, you know, that talent is a key point, and it doesn't, not something you can take for granted. So we like to get the word out and such. So yeah. And that is the end of my formal presentation. We are now 11:40, and I'll turn it open to questions.
Great presentation.
Yeah, thank you.
We'll pick the people out of the crowd.
Well, I'll manage people on.
Oh, yeah. Maybe I'll start right here.
I was just interested, what was your net return last year? Because the markets.
Net return last year, I think we came,
2020.
now we report, I have to go back and double check. You can find this all online. CPPinvestments.com would have it. I could even ask Doug to Google it here while we wait. I think what happened was on the calendar year, it may have been negative.
Oh, you're April.
When we're April to April, as of March 31st, we were actually positive. And
Yeah,
then,
so
yeah, exactly. So it's a little bit, but yeah, we took some pretty big significant downturns when markets went lower. And this is part of why we want to get out there and we want people to talk about, because as we get bigger, you'll see lots of headlines that'll say markets falls. It's some paper put, you know, CPP investments lost X billion of dollars. Well, that's a very frightening headline to see, you know, when it's your pension money. But for us, we've actually been talking about this for years. And if you look in some of our past annual reports, even we've released that 1 in every 20 years, we could see a really significant sort of fall. And we're built for that, right? Because it's about, we can't time market. We don't profess to be able to time all markets and perfectly, but what we know is that when we deploy correctly and take the right amount of risk, you know, people are, again, in order to get those years of like double-digit returns, you have to take on a reasonable amount of risk, the appropriate amount of risk, and that'll deliver more. And then you'll have down years. But we feel comfortable with the positioning in terms of our, you know, the risk mix that we spell this all out in our plans and things. So, but we like to get out there, talk to people, and so that when you see that headline that says in the last quarter, your pension plan has lost this. Well, yeah, but here's the perspective. Here's how it works. Here's how it deploys. Here's how the fund is needed. Sorry.
No, I was just you versus me, that was all.
Okay, I can, we can do some Googling. Yeah, all on the website though, yeah.
Did you guys invest in cryptocurrency?
Great question, we get it a lot, we not invest in crypto, so I'm looking to our previous speakers who are nodding, yes.
Yeah.
A few things there, we know some other organizations, yeah, people follow this and it made a lot of headlines. And we're not trying to try to just focus on our own performance. We looked, we didn't see opportunities that we thought were appropriate. And we'll say there's in the organization though, just in terms of expertise, is interesting to us and a lot of our people is blockchain, which is the technology that underlies crypto.
Yeah.
Because that technology is going to have implications for other things. So we're very, very curious about that. And we want our people to have a good handle and understanding, but in terms of crypto as an investable opportunity. This side of the room.
Based in Calgary, do you work out of Ottawa or on Zoom or?
No, good question. So we had all the global. I can go back up here. Our headquarters is in Toronto. So everyone's like, oh, so you're in Ottawa. No. The decision was made by the provinces and the federal government that the headquarters would be in Toronto, not Ottawa. The administration, though, is through a federal government department that That's what sends you your CPP. So they administer, we purely investment manager. So based out of Toronto, we have those global offices around the world. We are in Calgary a lot. We have one thing that I went on and did, recently sort of looked through is like proportionate to the rest of Canada based on population. How are we in Western Alberta? We're actually overweight Alberta relative to the population of Canada. And then some people said, but that's because we have higher GDP per capita in Alberta. So I said, okay, so when you look even adjusted for GDP, we're overweight in Alberta, and we have a lot of investments here. Just one of the folks I was talking to the other day, Wolf Midstream, which is a major sort of pipeline operator, and then they also operate the Alberta Carbon Trunk Line. They're one of our platform companies. We own more than 90% of them. They're based here in Calgary, and they do a lot of work. And we like opportunities like that because what they do is they're not listed on the stock market, they're owned by us. And they'll go out and look at opportunities, and if they need additional capital, they work to generate their own returns. But if they need additional capital, and say we see really opportunity, we need additional capital. These platform companies to be a way for us to invest into opportunities through wholly owned or majority owned entities. Okay. Yes, in the back. Oh, to the back. Yeah. Let's start with the lady in the blue.
I think that money would look really attractive to a government that's so in debt right now. And I know you said that it only takes 2 provinces to be on board for changes, but
2/3 of all of the 9 provinces have to be on board. 2/3 of the provinces, not 2. 2/3. Yeah.
so there is some protection to stop them from dipping into that money or.
Correct. I hear this a lot. I used to operate something called the contact box, which you can, and by the way, if you have any questions, you can write to the contact box. It's contact@cppib.com or contact@cppinvestments.com. But a lot of people will write and say, I'm worried that a certain government is going to come and it's very tempting to want to grab that money. It's a great question. We can come back and say no, because that is ring fenced, right? It doesn't even, tax dollars don't mingle with CPP contributions. They are kept completely separate. And again, because pensions are provincial responsibility, again, even if the Canadian government said, we want to do this, 2/3 of provinces representing 2/3 of the population would have to be in support of any legislative changes. So it's off to the side. Now, we own government bonds, which we buy at the rates, and when we look at them, we don't have to own a single government of Canada bond or provincial government bond. There's nothing in our mandate that says we have to. We own some because they fit a certain part of the portfolio with the right risk-adjusted returns. We'll buy them at prices that we think are fitting. We'll sell them at prices that we think are fitting. But nothing compels us to invest in that. So that is, everything is done at that arm's length, purely within our mandate. But it's a question I've heard a lot, and I'm glad I have the answer I do before. Yeah. Gentleman in question. Yes.
Everybody, thanks for your presentation. I'm just curious, given the fluctuations in the market and rates of return you cited over the 10-5-year period, does it seem that we have a targeted long-term rate of return of 5%, whatever it is? Obviously, can be exceeded some years and not.
What we have is exactly what you're targeting with markets and expected returns and projected returns going forward. I remember at one point, particularly when the markets were very hot a few years ago, and not our current CEO that went before us said, I don't think we're going to get double-digit 10% returns every year prepared accordingly. So what we have is 2 things. One is the 2 parts of the plan, but the base CPP is a bigger one. We deployed an 85% equity and 15% fixed income, and then we think that's the right risk mix for that. And for the other smaller growing part of the plan, I can break this up for people. It's a 55 equity, 45% fixed income. But if you look at the Office of the Chief Actuary and the December report, they said we assume that in order to deliver the return, keep the plan sustainable, that when we get the expectations we get are that base CPP will deliver 3.69% real over time, and that to support ACPP, they will deliver 3.27% real. Now, just for everybody who doesn't know baseball and these things closely, real returns means after inflation. So now we've seen what has happened with inflation. It's really gone up. Central banks are working very hard to bring it down. That's why interest rates are going up. So what we deliver would have to be after inflation. Now, the Bank of Canada's target, which is paid for many years, was about 2%. So if you figure that if that can be reestablished, so add 2% on to that 3.69 and 3.27, and that's what the actuary is assuming keeps the plan solvent. Our goal, maximize returns, but undue risk, and we deploy the capital into that 85, 15, and 55% to 45% to keep, what we think is the right balance to support the plan.
So Jeffrey, we got things online.
Yeah.
They're asking you to repeat the question.
Oh, I'm so sorry. I normally get to do that. Yeah, I will. Sorry, folks at home. We should have been doing that all along. Yeah.
Okay, there's two questions from online. What portion of the CPP is invested by the board?
What portion of the CPP is invested by the board? The entire CPP fund, which is the fund underpinning it, is all invested by us. We invest all of it. All 500 billion plus. Yeah. And
is the CPPIB going to continue investing in residential long-term care? Good question. Residential long-term care, are we going to continue to invest in it? I will sit back and caveat to say that in terms of where we invest, I will not talk about anything forward-looking, I will in general terms, but anything specific company or whatever, we can't talk about the future, but we can talk about general areas. I mean, we haven't, in terms of residential long-term care, we were not an investor in Canada, except through, I think we may have had a piece of a listed public entity, something called the trade on market, but in terms of a wholly owned asset, private asset, we did not have that. We have invested elsewhere. We did invest in a company in Europe called Orpea, which has had challenges as well. So where we go forward from here, we get asked about this. I mean, we have to look at every investment on its own merits and including risks around and things. And again, as we invest, we've had more than 10% return. That's tremendous success. But that doesn't mean every investment that we've made along the way has succeeded. We've had some investments that have not worked out. What we try and do as an organization is look at situations where we did not have success and try and learn from that and say, okay, well, we invested in this space and we thought it was going to be a good space, and there were situations there, and that's speaking in general terms through all major investments. So there's nothing to prohibit us in terms of where we deploy capital in that way, and we always want to look at the specific investment situation and take into account what are the risks here, what are the considerations.
Jeffrey, I think where that question might be coming from is specifically with respect to Rivera, which I believe is wholly owned 100% by, I think it's the federal government employee pension.
Rivera was owned by PSP, which is another plan that invests in the federal retirees. Correct. Yes.
I may not have your exact words used to refer to the pension being responsible. It's a responsibility of the province.
Constitutionally, pensions, what is the response? The military is the responsibility of the federal government. Pensions are actually provincial, constitutional.
So
yes.
when the province of Alberta says we're going to create our own pension plan, blah, 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 what are they talking about? What powers do they have, and how does CBP respond to that?
Exactly. So a great point. And I guess this is something that we've heard a lot, and Doug and I were talking about yesterday. How many people have heard about this idea of creating an Alberta pension plan?
Everybody.
Oh, wow, the whole room. Okay, excellent. You follow this. Okay, so we've been following this. I mean, its origins go back more than 20 years when a young, there was something called the firewall letter set out, including a young Stephen Harper before he entered federal politics wrote about this. And it was at a time of, again, federal provincial tensions, I think were higher at that point. And suggested that Alberta could take back certain things and have responsibility for certain, take control of certain things, which is a decision, by the way, of the people of Alberta, ultimately. So when it falls into the constitutional realm, Alberta has specific powers. At that point, Premier Klein took a look and said, no, we're not going to do this. But jump ahead 20 years, was about 2019, again, a time of, relations between provinces and the federal government in the various phases. But the idea sort of came out again with the current provincial government had raised the idea. They struck a fair deal panel, which toured Alberta. We came very engaged with this because there are significant implications for us. Where when they said what do Albertans want, and the decision, and they put forward a recommendation around that, but they said they would send it to referendum. And then we basically, we want Albertans to know effectively, again, if you don't know that who we are and what we do for you, well, how can you make a sort of fully informed decision? So we've been engaging a lot more, and out here a lot, sort of public, or regular public meetings, of course, that do presentations like this. So it's actually the sort of thing we want to do. We just want to make sure that people understand who we are and the value that we offer. You saw the performance that we delivered over the years. We point to that, and we think that's important. But yeah, what could happen is for an Alberta provincial government could give notice saying they want to leave the Canada Pension Plan. Now, where things go from there becomes the word that looks to mind is uncertainty, because when things were created in the 1960s, the legislation is supporting there, but of course there wasn't a lot of envisioning of what if a province exercises constitutional right to leave the plan. And again, this is when things are created, but what about when it gets built? What about the liabilities? What about the people, things that people have invested? So what's happened is the Alberta government did commission a report, and they talked about releasing a report in the near term. So we'll continue to watch sort of around developments about that. We know that there's been discussions that there could be a certain amount that they would say, oh, well, we're entitled to X amount of the existing CPP fund. How much that is, I mean, I don't know that I've talked to a lot of people. There's a lot of things that might be unclear about that. There's a possibility that this would, there could try to be a discussion between, the other participants in the CPP. Maybe if something is unclear, sometimes when the legislation is unclear, it can end up in court, and this can lead to like a lot of uncertainty. We do not, and if you talk to business people, we've never met a business person who loves uncertainty. And I especially don't think that business people love uncertainty the way that, there's always uncertainty when you're running a business, but the amount that you can minimize it. For us, we try to engage more, get more active, talk to people about the value we offer, but there is a tremendous amount of uncertainty around this. And there's questions around portability and exactly how that would work. And then has everybody who here has working careers worked outside of Alberta? Okay, nearly the majority of the people in the room have put up their hands. What does that mean for what you paid in elsewhere? What does it mean for if you want to retire, let's say your grandkids move to my home province of Saskatchewan and you decide that you want to settle there. There's that. Also, there's a lot of tremendous amount of uncertainty there. There's also, administration would have to happen. So right now everything is administered centrally through CRA and but the Alberta government would have to set up its own sort of administrative mechanism in order to do this. So kind of duplicate of what is already happening. They would have to set up, who would collect these contributions, that sort of thing. And that, then the question is, would that be paid for with the contributions, or would it be paid for with taxpayer dollars? Or so there's a lot of uncertainty there. So
what happens when we move to Quebec? Because they have
Yeah,
their
exactly.
plan,
Yeah.
or vice versa, they move to Quebec out.
They do
And
have.
I noticed in your report,
Yeah.
the return on investment wasn't as high as the CPP.
Yeah. Another thing to consider about a couple things about, I'll talk about Quebec. So there was an agreement to harmonize that plan with Canada. So I don't know the exact mechanics, but in theory, we could go there and move back. This involves an agreement that was set out at the beginning when the plan was being built, and not in, but what they have to do is harmonize benefits. Now, something happened in Quebec. When Quebec set up its own pension plan, it had a demographic advantage. And it was that, at that time, Quebec had a younger population. There were much larger families than the Canadian average. So for policymakers, it would have been an advantage like, hey, this is a good deal because our Canadian was more, because we have a younger population on average. But jump ahead, and the demographics have completely shifted with Quebec. So you actually have an older population on average, a lower birth rate. What does that mean? That means that a worker in Quebec pays a higher rate of contributions to get the exact same benefits that you do, right? Because they don't have the demographic favorability. Now, the great with the Canada Pension Plan, it doesn't matter if you're, which province outside of Quebec, which province you're living in, where you're moving, you're pooling your risk, right? It's like fire insurance, life insurance. You get that benefit of the pooled risk. Now, the proponents of the plan would say that Alberta has right now a younger population on average and a wealthier population. So therefore, they believe that you could have lower contributions. Assuming all demographics stay the same, and even I've spoken to people, pension experts who are favoring the plan, but they do say, well, assuming demographics stay the same. Okay, well, so we've got these risks, we've got uncertainty, we've got the administration, we've got all of these questions that are very open. So yeah, we noticed the other thing is around businesses. Just to talk about the QPP, I've spoken to, for example, one expert at both with an industry association that oversees payroll. And even with Quebec, there's challenges for businesses because of portability, where if you've got people in Ottawa and you've got the Canadian Tire stores over in Gatineau and it's Christmas and it's busier over there, you've got to transfer somebody over for 3 months. It's not like moving them from Saskatoon to Lethbridge. It's like it is, you get more administrative challenge. The other thing some businesses have talked about is like, well, you know, I was talking about someone I flew back to last time I went back to Toronto from an event we had here on November 30th. I was beside somebody on the plane from Sydney. Are you going to Sydney? Oh, where do you work? I'm up at Fort Mac. Going back to see my family. And, you know, just I was laughing because my boss was in front and I was telling him about the Canada convention. I just you strapped beside me on the plane. But he was curious. He was interested. But when we talk to some business leaders, it's like, well, we really rely on Alberta. Part of what makes it a very dynamic province is. And again, I grew up in St. Louis, Saskatchewan, graduated high school in Birch Hills. Big chunk of my graduating class went to Alberta. I had jobs, opportunities, some of them have come back. But that sort of labor market mobility is really good for businesses. You know, it helps them keep things flexible. So the benefits is, you know, that by having this current system, it's an advantage. Now, the Alberta Chambers of Commerce recently did online article in Calgary about it, surveyed their membership to say, hey, what do you think? Do you think going and getting a separate, separate APP, do you think it will be an advantage for you over 35 years? Or will it be a disadvantage? And on average, those business people said disadvantage, right? So we know there's a lot of questions around this. Again, we're a nonpartisan organization. We serve governments of every political stripe, and Alberta is one of our stewards. And so we stay very connected with them on talking about plans. When they need information, we present it to the Caribbean panel. We want them to know who we are, what we do. This question will ultimately be decided by the people of Alberta. So we'll follow it closely, and you'll probably see back out here at other times answering questions about who we are.
All this excitement making CPP look at Alberta a little bit more, invest a little bit more in the province. Are you taking notice of us more?
I would say, you know, I put it out there again, before any of this happened, and again, I think it's the case that we would have been, we looked at now, Alberta, we're already overweight Alberta. So before any of this happened, we were looking at Alberta. Why are we looking at Alberta? Because of the opportunities, because we have, it's in line with our mandate. It's not because, oh, one province, you know, Saskatchewan says you should come here more, you should invest more. I mean, we'll show up and say, you know, but every opportunity is on a commercial basis, right? So we don't invest in Alberta because we're supposed to, you know, we were already here. We've been here for years. We'll continue to be here, but we're always investing the same way we do anywhere else. Where are we going to get the best risk-adjusted return for people? And right now, we've been overweight in Alberta because we found more opportunity here. We're not doing it because, you know, principally, you know, if another province sort of made those noises, you know, again, it's not. Our mandate is very clear: deliver the right risk-adjusted returns, and we found them in Alberta. Because the opportunities. Yeah.
I think you need to catch a plane.
I do need to catch a plane. Okay. But just a final thing, I will say: if you have any follow-up questions, contact@cppib.com. That's contact@cppib.com. If you, I don't know if you need something to get to me, throw my name in there as well. But again, I'm really happy. Wishing I could, have more time to answer all your questions. I'll stick around a little bit to see how soon they need me on the plane. But to answer a few more questions. But we really just want to say thank you to CARP and everybody who took the time here. And we really appreciate the opportunity to just get in front of you and talk about what we do. Sounds good.
I'd like to thank you for coming and talking with us today. That was all very informative. Most of us probably collect CPP. I'm not close enough. Most of us probably collect, but we don't think where that money comes from necessarily. Anyhow, thanks for coming today. I have a couple of announcements, and thanks Mike and Pierre for sticking around. We did bring lots of Zoomer magazines today. Please take them with you and have a look at them. and some other information. Calgary Police Services had some information back on the table also. And please take a couple of cookies to go home. Doug, did you have something to say?
Yeah, and we do have some membership forms if anybody wants to sign up for CARP. We do get a break if you sign up here. I would like to thank everybody for coming out on this cold, wintry day to come here in person. I very much appreciate the amount of people we had online as well. I do have to apologize to them. We ran into a few glitches on how this is going to work, so this was a kind of trial run, and hopefully we'll be a lot better online on the next one in
March.
March 25th.
Yes.
Okay, unless there's anything else, thank you, everybody, and safe travels home.
Thank you very much. Really? I should have written down all the, I'm always writing to the government, so
Okay.
my latest pet peeve.